and welcome back to the 6-5 Summit. I'm Shelley Kramer, one of the founding partners of Futurum Research, and on behalf of my team at Futurum and the team at Moor Insights and Strategy, welcome. We're so glad to have you here. In this spotlight session, Futurum's Daniel Newman is joined by Matt Murphy, the president and CEO of Marvell Technologies, and they're going to talk about the transformational journey that Marvell has undergone in the last few years. Matt's also going to share a little bit about Marvell's 5G strategy for the future and how that is likely going to impact the market. This is going to be a great conversation. So without further ado, let's get right to it.
Matt Murphy, CEO at Marvell. Welcome to the 6-5 Summit. I'm so pleased to have you here today with us as part of this event this year.
Hey, happy to be here at the summit. Thanks for inviting me. It's my first time, so really appreciate it.
It is your first time, although Marvell, I'm very pleased to say, played a big part in our 2020, our inaugural edition. So it's great that you were able to, clear up your schedule. I know it's been busy, just coming off earnings. Pretty big acquisition. I've got a bunch of questions for you, Matt. And if you give me the all clear, I'm going to fire one ready.
Let's do it. Sounds great.
So 5 years you've been at Marvell, not quite, but it's coming up really soon. And anyone that's read my assessment tends to be bullish on the company, but seeing that this company's gone through a major transformation under your leadership. Can you talk a little bit about the time that you spent at the company, the broad changes that you've been making over the past 5 years, and sort of what are the macro trends and ideas that are really driving your strategy?
Sure. Well, it's pretty amazing to think that 5 years have gone by. I think I got announced as the CEO on June 20th. So it was probably right around this time I was making my commitments to come and informing my former company that I was going to be taking on something new, which at the time was a big challenge in front of me. It was quite risky, actually. And I joined formally on July 11th, 2016. I think a couple things, Daniel, if you sort of reflect back on the last 5 years, what I'm really proud of is myself and the team that joined me and that we put together. I think, is driven one of the most important strategic transformations of any major technology company over the last 5 years. And the reason I say that is if you go back to Marvell this time 5 years ago, we probably had 75% of our revenue was in consumer type devices. These would have been things like going into laptops, mobile phones, tablets, consumer gadgets. In fact, I remember my first month in the company, there was an employee that was very proud that he posted on LinkedIn that Marvell was the official supplier of Wi-Fi IoT devices for the first connected Mattel Barbie doll house. Okay, so that was sort of where we were, and that was really not where I thought the world was going to head for us. Okay, which was not going to be a future in consumer, but a future where the biggest end market growth drivers that I believed back then were going to be in what we call the data infrastructure opportunity. So end markets like cloud computing, like wireless infrastructure, networking, in the enterprise, and then longer term automotive. And I had that view even when I started. Now, it's been a big lift to get the company to basically flip its consumer focus to this data infrastructure focus, but we've more than done that. And we find ourselves today, upon closing in 5 years later, we've basically doubled the revenue of the company. We're going to be one of the leading companies in digital silicon for the 5G build out that's happening on the infrastructure side. I would argue, and we could talk about it later, we have one of the most exciting and complete data center portfolios in the world in terms of semiconductor companies. And then we've got this call option on automotive, which has really gained a lot of traction for us for future growth. So when you add it all up, we think we're in really the key growth spots. We've got a phenomenal team, both from organic Marvell and the acquisitions we've done. And happy to talk more about those drivers. But it's been a lot of work. It's been a labor of love, but I think our best days are actually ahead of us.
Yeah, a lot of those were key momentum factors when I was looking at the big semiconductor companies on the rise. I actually wrote an op-ed about it a few weeks back, and Marvell's been one of these companies that it doesn't always have the same sort of household name, but it's getting there, and you're starting to see that being included in more and more of these big data stories. We're going to talk about that data side. You were really early on the DPU, for instance, and that's turning out to be a trend-setting, new product set, and it's got a ton of opportunity wrapped around it. And by the way, you're also making some really ambitious plays in the way you're communicating to the market, Matt. And I thought this was worth mentioning, but in your earnings this quarter, you guys took a big risk that the market seems to be responding really well to, making some commitments about the way you're going to report your revenue, which I think is bold. And I think it's also a very strong indicator of your confidence that you're saying, hey, we're going to start taking 5G, we're going to start taking data center, we're going to take automotive, we're going to break these things out. We want the market to see where our business is growing, how our investments are shining. Just quickly, because I don't want to get too far off the script, if we had one. But what drove that decision? Was it about transparency, confidence? What got you guys there?
Yeah, I think it's actually born out of something fairly simple, which is going back to my original comments about how I even thought about our strategic roadmap and our investment decisions 5 years ago. It's all about the market. In fact, I wrote an all-employee email sometime last year during the pandemic. I started this habit of writing emails once a week on various topics for our employees because everybody was at home and there was just a lot of concern. And so I decided to over-communicate. So I wrote an email one week, which was titled, "The Market Always Wins." Okay. And this is a concept that was drilled into me a long time ago, which is you can have a great team, you can have a great product, or you can have a great market. And in the end, and you sort of match up market forces to any of those dynamics, market always wins. And so we've looked at things like how do we invest in data center, or for example, 5G or automotive from an organic standpoint, and it's informed all the acquisitions we've done. So I've been running this company with that mindset. And so how we report today is actually not easy for investors to figure out because we report by product. We report a storage revenue segment and we report networking. And invariably we get these questions, well, how much of your storage is in data center? How much of your networking is in automotive? How much is in 5G? How much is processor? How much is DPU? And it gets very confusing. And ultimately what investors are looking for, but also the market and folks like yourself, when you want to follow the company and you want to keep appraised of what we're doing, it's much more helpful and transparent to show it by market. So we actually are breaking it into 5 segments now, and you'll see a data center segment. You'll see a carrier infrastructure, which is where the 5G will be. You'll see an auto industrial, an enterprise networking, and then a consumer, which has all the computing consumer type of businesses in it. We're going to give 7 quarters of historical results when we report our earnings sometime at the end of August. And then we'll guide our third quarter purely by end market. And you're right, it's much easier to have just 2 gigantic segments and then just sort of talk around it. It's another thing to make the step to actually provide the transparency. But that's how we run the company. I think it helps investors understand our business and our employees and just our broader stakeholders. And I think when the numbers are all available, it'll be an even more exciting story when you can sort of actually unpack the growth and what we've accomplished over the last several years.
Yeah, it's great, Matt. If anyone tracks my sort of opinion pieces around earnings and markets, you'll always see one of my biggest, boldest complaints is always when there's a lack of transparency. So when the commentary and the numbers are hard to kind of audit or, line up and say, hey, you say your cloud business is growing a bajillion %, but I can't tell because your cloud number has 63 pieces into it. Is it what's really growing? So like I said, I think the market's going to really appreciate it. Of course, it's also going to hold you and the board more accountable for the results because they're going to be able to look at everything and match it up. So I think it's great. I'm excited by what you said. I want to look at those historics. and really get a runway, and also helps inform my own predictions and the things that I've said about where the company's going. So congratulations on that. Congratulations on the quarter. Um, let's pivot over now, Matt, to that data topic. You made that big pivot. You've moved from consumer and data infrastructure, over the past few years, clearly has taken shape. As I mentioned, I believe the company's taken a strong leadership in the DPU space. You sort of alluded to this, but what drove Marvell? What was the factor that made you you say we have to make this pivot? This is it.
Sure. Well, a couple things. I think very, very early on, as I mentioned, with a market-based focus in mind, we needed to make a choice, right? Which way we're going to take this company. So the decision was actually relatively easy when I went through the first set of reviews about 6 weeks after I became CEO of all of our businesses, all of our investments. We had spent $1 billion in the prior 12 months on research and development. And basically what I did is we unpacked every dollar of that and where was it going and how was it being allocated and what were the historical returns and performance of those businesses that were allocated to that R&D and how are we doing, right? And so even though the bulk of the revenue was coming from this consumer and computing area, the profitability, the market position, the chance of succeeding was actually low. And so we bet on basically two pieces of what I would call our data infrastructure strategy at that time. We actually had a market leading, and still today, we are the market leader in storage products, storage SoCs. So that was an area I felt like we could build on. We also had a very, very good, solid enterprise networking business, both in switches as well as Ethernet PHYs. And that was something I believe we could build on. And so early in 2017, maybe 6 months after I joined, we put out the Marvell mission statement, which was like super simple, but it basically said, we want to be the leading semiconductor company in solutions that move data, store data, process data, and secure data. So if you think about move data, that's networking. Store data is the storage piece. Process data, right, which you alluded to with DPUs, that's one that we did have a processor business. If you remember, Marvell historically had a 64-bit ARM-based SoC product line that was kind of at the lower end. This was sort of like like 2-core, 4-core type of devices, the smaller business, but that was our process piece. And then secure. So later on, when we did our first big acquisition, it was Cavium. And the reason we did that was they were the leader, in high-end ARM-based microprocessors, and that bolstered our business there significantly. Later on, we did Aquantia that bolstered our presence in the move data, the networking side. We already had a PHY business. We added a bigger team to that. We did Avera, which got us custom ASIC. Those are almost all high-end compute processing type of solutions, albeit they're ASIC in nature, but still you have to have those types of IPs. And then finally Inphi, which again was on the move data at very high speeds on interconnect. So it started with a strategy. It took a bold bet to basically get out of what we were in and get into something that we thought was going to be bigger. And we augmented that through M&A as well as our own investments. And now if you look at all those pieces, which I think are the essence, of data infrastructure and any of these major applications, you need to have networking IP, storage, processing, and then security embedded in all of it, which is another topic, but we're very good at as well. And we've ended up as basically the pure play company with all those pieces under one roof. No one else has all these pieces today under one roof.
Which is a pretty big part of the story too, was how you put it all together. And I was going to ask you all about acquisitions, and I might have you elaborate a little bit more on what you just said with the acquisitions. But just quick step back, when you made that pivot, was it met largely by acceptance, or where do you think the proof point was when everyone said, got it, this is working? Because when you take your biggest part of your business and then you say, we're going to move away from that, and we're going to move to a part of the business that's got a lot more upside, more profitability, but it's not a big, a lot of times, like you said, the market isn't going to okay that. Did you get acceptance right away, or did it take some time?
Yeah, it's an interesting one that you ask. I think I'll give you two answers. The first one is really around the internal reaction, right? The employees, the longtime Marvell people. That was kind of interesting. So, when I started, the company was, it was in a lot of trouble. The morale was low. There was lots of problems with it, and yet people had really hung in and sort of believed that they were willing to give it a shot. And so, I joined in July. We did these strategic reviews in August. I actually gave the board a preview of it in September of kind of my thinking, and then in October, I held what was Marvell's first ever leadership conference, where I actually brought in all the senior leaders from around the world. Be surprised to know that really hadn't happened on a regular basis, but I brought them all in, and myself and the rest of the senior team just walked everybody through every one of these businesses. I showed them what I had been shown, okay, and the true kind of state of each of these businesses. Like, did you know we are number 6 in this market? Do you know that we're losing $100 million a year on this product line? Do you know that? And so shining the light was very helpful for everyone to understand. And so I kind of took everybody through a couple of days where this is where we're at, and then here's where I think we can go. And in the end, I remember we did this big roundtable where everybody got to stand up, and sort of we did what I call a pre-mortem, which is we said, okay, if we're going to make all these changes, what are the things that can go wrong? Let's, instead of doing a post-mortem that it's already gone wrong, let's actually sit here and figure out what could go wrong. And I remember one of the most senior people there, who was one of our, is today, he's still there, he's one of our strongest technical vice presidents, stood up in front of the whole leadership team of the company, which was about 80 people, and said, you know something? Everything you're saying, obvious. Should have been done 8 years ago. Fully with you. We're all with you. Oh my goodness. Can you imagine the power of that? And so by taking everybody through the journey, people were willing to go through some pain, because we had to do a bunch of restructuring, right, to actually get the company set up right. So that part, actually, I give a ton of credit to the Marvell team. Almost all of them are still there, the key leaders from that meeting that were in the engineering roles that really controlled the bulk of the spending and the bulk of the outcome of our future. But then the other challenge I had was, remember when we had these issues, we had a new board that came along with me, and we had an activist investor in the stock, and he was on the board. And by the way, great guy, got to know him really well over the years, but was obviously, if you think about it, what happened is phase 1 was kind of cleaning up and repivoting. Then I went to them maybe 6 months after this leadership meeting and said, now I want to go do M&A. And the first thing I proposed was basically that got traction with the board, was to do Cavium. But we paid 85% of our enterprise value, Daniel, for Cavium. I mean, this was a swing for the fences type of thing, right? If you think about me as a first-year CEO, the thing was in trouble the year before. An activist on the board who tend to be more value-oriented, not sort of, hey, go growth. And there's nothing wrong with that, by the way. That's a very valid philosophy. And if not for actually the intervention that occurred in early 2016 in Marvell, I wouldn't be standing here today. Marvell wouldn't be here today. So you actually have to give him and that team credit. And there was a lot of sort of challenge to get everybody over the hump that we could be, as Marvell, a low multiple company paying a very high multiple for Cavium and not destroying value. And as it turned out, it worked out beautifully. And it's been a home run acquisition, and it was well received by the market. And Peter Feld, who was from Starboard, was thrilled with the outcome. And then about a year later, he said, my work here is done, and you guys have done a great job, and I'm going to move on to other things. So it all worked out, Daniel, but it certainly was actually easier to get the internal team on board because we had the burning platform. It was a little more of a challenge as a first-time CEO with such a dramatic sort of first-time M&A, but I felt like we had no other choice,
Well, you read the tea leaves correctly, and I mean, it ends up serving for a great transformational story. A lot of people probably haven't heard it. Maybe here is the first time they're going to hear it. So, glad you were able to share that here. Glad all of you out there that are, maybe learning about Marvell more for the first time got to hear it, because the company's on really stable footing right now and is gaining a lot of momentum. And in fact, one of the areas you're gaining a lot of momentum is in 5G. Um, you mentioned the carrier infrastructure breakout that's happening, but you know, when you're not making devices and handsets, and you're working behind the scenes building the technologies that make these devices work, that make fixed 5G access a possibility, all the things you're doing, people don't necessarily know. Talk a little bit about the 5G, the Marvell 5G strategy, where you see this going. How big is this going to become for the company?
Sure. Yeah, this is a huge opportunity for us. And I think if you had gone back, certainly pre Cavium, I mean, we had no carrier 4G exposure to speak of. I mean, it was de minimis level of revenue. And even Cavium, when we bought it, they had basically one customer for the baseband processor only. Now, again, we're talking about base stations, not handsets, and that was kind of it. So that transformation was pretty interesting. If you think about the base station market and the RAN market, there's a tremendous amount of digital silicon that goes into all of this infrastructure. Just to give you an example, an average sort of macro cell base station has around $4,000 of digital content. Now, those could be ASICs, those could be baseband processors, those could be layer two processing for transport. You have FPGAs that do some of that. So that whole kind of bill of materials is just big round numbers, $4,000. And then big round numbers, there's about 1.5 million base stations a year sold. So you multiply the two, you get about a $6 billion opportunity. One of the players in the market is captive, and that's Huawei. They've historically done everything themselves, so you have to take that out. They're historically about a third of the market. So you get about a $4 billion opportunity. So what was exciting for Marvell plus Cavium was you got a $4 billion opportunity in front of you. We have all the pieces between the two companies and virtually no exposure in 4G. So what's happened is we've had significant design wins. This has kind of been well known, but we have all the key pieces. We have leadership in baseband processing, leadership in the high-end CPUs for layer two, which is largely transitioning now across the whole industry to ARM. We have ASIC capability, which we can do for things like digital front ends, actually up in the radio head. We have massive MIMO beamforming. Now we announced with Samsung. Actually, they announced on their letterhead, their press release, that we were supplying a custom IC for them with Marvell IP in it for massive MIMO beamforming for their rollouts in North America. As you go from 4G to 5G, backplanes have moved to Ethernet connectivity. So there's Ethernet switches now in all these base stations. We've won big share in that market. So when you think about all the digital pieces, Daniel, inside these base stations, we've come from out of nowhere in this telecom 5G area to being what you would argue is probably going to be one of the largest suppliers of semiconductors into 5G in this entire cycle. And we're just at the beginning, by the way. I mean, you really only had a big build in Korea 2 years ago. China started last year, but those are going to continue. And then you've got North America, you've got India, you've got Japan, Southeast Asia, and then Europe finally. So we're in the very early innings of that market rollout, and our content and our design position is extremely strong across multiple OEMs and multiple products.
And of course, you'll have releases, you'll have updates. They'll, upgrade the infrastructure, and sounds like you'll be there as they continue to, these cycles last 7 to 10 years. And so, while the the visionaries want to start throwing I'm remiss to even say it as a serious technologist, but 6G as a topic out there. I mean, it will be a thing, but we're in like the year 1, 2, 3 of a minimum 10-year cycle. Yeah. And only in really some of the most advanced countries and biggest markets have we really started deploying any infrastructure at scale. And so, if you're looking as an outsider in and saying, how big is the 5G opportunity? It's big.
It really is. And if you think about the technology that feeds it, just to give you a sense, right? The first wave of these 5G radio base stations were pretty much all built on either 4G chipsets with a big heavy software overlay to get it to work for the 5G standards, or on the hardware side, very complex, FPGAs. Which, by the way, every cycle starts this way. 2G to 3G did this, 3G to 4G. This is nothing new. But you kind of, so just to give you a sense of where we are, so the FPGAs were sort of in the last few years, right? We're now coming to market, and others, in more custom purpose built chips in what I would call 12 to kind of 16 nanometer technology. I mean, that's basically what we're going to be shipping the next couple of years. Behind all of that, which is what's really exciting, is we've had significant design traction on our 5 nanometer platform. And so all those chips are now in flight. They're in design. Actually, we taped one of them out probably about a month ago. So just to give you a sense, there's so much more to come, as you're pointing out, that even the latest, greatest state-of-the-art base stations today are not even on the latest node. So there's going to be tremendous improvement in this market and affordability and capacity that these base stations can deliver at the right cost points, because the silicon is going to finally catch up. And so it just speaks to the fact that, and then there's going to be another wave after that, right, before you get to 6G. So yeah, I think it's a 10-year cycle. We've certainly got a small group already looking at the next generation standards. We'd be remiss not to be doing that. But this is going to be a very, very long cycle. And I think the exciting thing about 5G is you're going to see it expand into industrial applications, into automotive applications, enterprises, private networks, and IoT. I think these are all expanded use cases for the technology, which probably is much broader, certainly, than 3G, which was voice only with a little data behind it. 4G, which embraced data for the first time, and now you've got kind of a very data-centric 5G world.
And it basically, 4G brought the OTT world to life. It brought social media to life. I mean, so many innovations that people don't realize came as a byproduct of that level of connectivity, right? We're online, connected with high data throughput pretty much anywhere and everywhere. And 5G only exacerbates that, makes it better, no matter where you are.
Right.
I think the analogy you kind of were calling for is, hey, just because you bought the latest, greatest device doesn't mean it's the last one you'll ever buy. And the infrastructure is the same. And sometimes I think people don't realize that infrastructure continually has to be improved too. And I'm not just talking about roads and bridges, which is what the world seems to think infrastructure is sometimes. I only got a minute or two left with you, Matt. And by the way, it's been great. I'd like to take it home, just talking about one part of your business. And it ties into the 5G pretty well. But automotive, you guys with, your whole business model, networking, connectivity, I mean, that's going to fuel the future of automotive. You're not building cars. You're not necessarily touting an infotainment system. So the name Marvell doesn't always get thrown in, but you're in a lot of vehicles and you're in the story for a growing automotive business. Just share a little bit about your place in automotive. Great way to take us home, both literally and figuratively. We'll take a ride.
Sounds great.
In a few minutes.
Sounds great. Well, I think it's a good one to end on, because as we discussed 5G a lot, we didn't have a chance to cover the cloud, but that's going to be an enormous cycle for us. And then beyond that is really automotive. So if you think of the waves of sort of growth for the company, that's kind of how it layers in. And in fact, I was in part of a meeting, recently, and one of the I think it was Price Waterhouse. Their view was by 2040, which I know you say, well, that's 20 years away. Oh my goodness! But in automotive, that's actually a reasonable period of time. That you could argue automotive will be the largest end market for semiconductors. Okay, just based on, not on unit growth, obviously, but based on the content growth. So with that in mind, let me just take you through where we're at. I've been involved in automotive semiconductors since 2004. So at my prior company, we went through a similar journey I'm taking Marvell through, which is when I was at Maxim, we were not an automotive supplier in 2003 to 2004. Now, in that inflection, what we saw was that the consumer device experience was making its way into automotive. I mean, if you go sort of the prior 10, 15 years before early 2000s, let's call it, the innovations in automotive were things like, electrifying windshield wipers and door locks and transmission control and fairly basic kind of body electronics features. The 2000s brought in this wave of infotainment, right, which became actually a key selling feature for vehicles when consumers started buying cars. And the reason is they wanted their iPhone-like experience, right, to be in the car. Makes sense. But that whole wave actually, and I was in the middle of it because Maxim had extremely good consumer technology for things like smartphones and laptops, battery management, LED drivers, power management, you name it. And we basically got pulled into automotive. And as a result, by automotivizing all these consumer-based technologies, it became a very large business. I think the next 10 to 15 plus years is the wave of the connected car. Okay, cars that are going to be re-architected differently. They're going to have high-speed computer networks. The storage requirements are going to go through the roof. There's talk of doing centralized storage, petabytes of storage. The compute requirements, especially as the cars are now differentiated not on the infotainment, and they're certainly not differentiated on the miles per gallon or the horsepower or your 0 to 60, they're going to be differentiated on the ability to run your apps, to be self-driving, to be secure, to be autonomous, to be connected. And so guess what the key fundamental elements of all of that are going to be? Move data, which is our networking, store data, which is storage, process data, which is CPUs, and then secure, which is secure at all. Daniel, we're active in every one of those areas today. The one that gets the most, press today because it's where the real revenue is in the networking side. So we invested 5 years ago. We set up an automotive business unit after I became CEO to focus on automotive networking. That business today, we've said, will be a $100 million run rate business exiting this year. And at our investor day, we showed it going to, over $200 million in revenue with a market size going to $1 billion. Okay, that's just for the in-car networking based on Ethernet. We're now involved very actively as more and more of these large OEMs decide that they need much more intense compute capabilities. So guess what? Our DPUs that we designed for the cloud, we're now looking at, and by the way, TSMC just recently announced their 5 nanometer automotive flow. So we're aggressively investing in that. So we intend to provide compute as well into automotive. And then with our storage portfolio, particularly in SSD controllers, the world's moving to flash inside of the car for centralized storage. And then we've also got great security offerings that we offer in the cloud today, hardware security modules. That's all getting a pull. So I see a really bright future, Daniel. We're going to be a major player in automotive. And we'll look back, when you go out but it takes time, but I think we're very focused on that as a market because I think that could be that can be and will be the next great growth driver for Marvell after 5G and after cloud. There's even more. The gift should keep on giving is the way that we look at it.
Matt, I could probably spend another half hour. I could have you run through the cloud business and actually would love to do that. We're going to have to make another time for that. But I'm so pleased that you were able to spend some time here, really tell the Marvell story. Congratulations on all the success that you've had so far. And thank you so much for being part of our 2021 6.5 Summit.
Excellent. Thank you, Daniel. And thank you for having me and giving me the opportunity.
Everybody, that wraps up this conversation with Matt Murphy, CEO at Marvell. But stay with us. We've got a great day of executives here at the 6.5 Summit. Our whole semiconductor day is loaded with insights. And of course, 5 days, more speakers, and all these sessions are available on demand. So whether it's during the week of or sometime after, we hope you tune in. We hope you share. We hope you keep coming back. But for now, we'll see you later. Goodbye.